presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the #1 market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What is going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We don't have the camera on today, but that's all right. Either the chart's coming through or we have a slate up. We're going to be joined today by Tim Ord of the Ord Oracle. Really looking forward to that. He'll be on the second and third segment. It is very cold here. I think this is the only place in the nation besides for maybe the southwest of California that doesn't have at least some snow or sub-freezing temperatures. Kind of crazy. Of course, North Florida, particularly the Panhandle, got up to about 6 to 8 inches of snow last night. That is kind of insane. It is freezing here, but let's see what we got going on in the market, okay? Kind of interesting stuff, right? Yeah. Yesterday, I think, was super unique. Now, of course, I wasn't on yesterday. We had Tommy on, of course, with our guy Sean Edwards from Direction. That was a great interview. Strongly recommend checking that out. Of course, we've been looking at some leveraged Direction ETFs recently. But you kind of had a switch, right? We had been kind of noting that the Russell had been gaining far more than the other indices, right? So you had maybe the SPY was up, well, who knows, like 0.3, 0.2%. Same with the composite. Dow Jones doing a little bit better, and the Russell was moving significantly. So we went into one of the leveraged ETFs for Russell, URTY, and yesterday got kind of smacked in it. Now it's recovering a little bit right now. Beginning of the day was kind of tough for the Russell, but that momentary kind of shift in the breadth is interesting, and what I had kind of been assuming was going on with that. These big companies in the SPX, really the top 7, have been getting so much money, and so this idea is like, okay, maybe this is kind of overpumped. Let's see, can earnings really keep up with this kind of stuff? Let's get in to some of these smaller caps in the Russell. And I think what happened essentially is Netflix did extremely well. Okay, we did a leveraged ETF from Direction on Netflix before earnings. Obviously gapped up pretty heavily. We can just pull up, kind of see what happened with that. And I think what that told them, then additionally, you had this, essentially this promise from the Trump administration to build out some of the data centers, and all the companies that had been in that industry are the ones who are continuing to get pumped in the past. And so it's kind of like indicating to the markets like, hey, these big boys still have ways to go. It's probably safer than your smaller caps, right? That you'd find in the Russell. So what's the point of shifting out? I personally, that's kind of what I think is going on with it, because you see that pivot right around Netflix gaining, obviously with Oracle gaining, some of these other larger companies moving to the upside. So kind of interesting that we're back in the, just that kind of spread that we had been having. Now, the Russell is doing a bit better right now, comparatively speaking, to the SPY. You have the SPY up about 0.24% at 607.89. You get the composite trading off 0.17% at 19,974. I believe this is from some news from Sky Hynix. Yeah, SK Hynix is obviously a big supplier for chip companies. Believe you have NVIDIA down off 0.54%, ARM getting really shot, which makes kind of sense, right? Because, the semiconductor realm has been moving up because of its inclusion and necessity, really, with building out AI capabilities. And ARM, these are consumer semiconductors in some certain sense, right? You have Micron off about 3.84%. The consumer semiconductors got, were kind of lackluster over the past few years. any semiconductor company that really blew up on anything substantial were going to be ones that are contributing to AI build-out, like NVIDIA. So you get ARM coming off 8.68%, NVIDIA off about 0.54%, kind of bringing down the composite a little bit with NVIDIA there. Let's see what Tesla is doing, just curious. Off 0.93%, honestly not too bad. You have the Dow Jones Industrial up about 0.76%. You have the Russell Futures up about 0.31%. The DXY coming down quite a bit, Trading at 108.01. Of course, we made that high at 110.17. Now, obviously still elevated from what we were seeing at the end of last year or right before the end of last year. Of course, you had 100 low in October. Let's see, crude oils trading off about 1.3% at 74.46. You have that gold contract off about 0.3%, 2,762, with copper up about 0.58%, silver off about 1.81%. Man, how about that? Steel Dynamics, I thought they had earnings, and it looks like they didn't necessarily impress. Well, you had an actual EPS, 1.36 compared to 1.28. I didn't read the earnings for it, but I'm supposing forward guidance might have been a little shaky if that's the case, or just didn't impress given the market cap. We can take a little look into that maybe after Tim gets off. Roku still doing exceptionally well. Fubo coming back with a vengeance. Vuzi off 2.36%. Some of the big stuff that I'm really looking at right now is going to be TSSI. Okay, so that's TSS Incorporated. These guys really stand to make quite a bit of money with these data center build-outs, kind of like a little bit of like an SMCI, but not corrupt and marred with scandal. You're trading at a 19 billion market cap right now, and SMCI, obviously, we've really had a slow burn. Of course, you get to the low of 1725 on the information that they weren't going to be delisted, come back up around that $48 area, and we're petering out. Now, I want to compare really the earnings of SMCI to TSSI, and like I said, when we get back, or rather when we get done with Tim Ord, we'll take a look deeper into TSSI's kind of financials. Very interesting stuff. Does not have any analyst coverage right now, and I think they probably do stand to do some well. Obviously, pretty extreme PE, but we can talk about maybe why that is. And then a market cap of 384 million. And then additionally, I want to talk a little bit about SPCB. This is Supercom Limited. Some very weird stuff going on with this stock, and I don't know exactly what to make of it at this point. You have a market cap of 30 million, PE of 14 on it. This is an Israeli company doing essentially analytical AI for IoTs. They've expanded very heavily into the US, but they basically had what is essentially a debt to equity conversion. They're trading about 15, 16 right now, and they were able to convert some of their debt into common shares for a bank that held some of their debt. They sold it was about 100,000, which is 7% of the current float. But the shares were at something like 43.76. And you can look at that two ways, right? I mean, is the bank concerned that they're not going to have the money to pay the debt back, so they want to be able to get some exit if they need? Does the bank think they could take off if they weren't saddled with this debt? It's kind of hard, I think, right now to parse out what this is, but it's an insane movement for the day. Obviously, you have a high right there of 1895. Folks, stay right there. We'll be right back with Tim Ord after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. We're working on getting Tim on right now. No big deal. Oh, interesting. 3:18. I feel like the clock's a little bit off. That's all right, though. Anyways, SPCB. So what do we make of this? Let me pull up the Edgar here just so I can get you all the right information. Man, using Yahoo as a search engine is just, I don't understand why this is native on this computer. So yeah, Israeli company, they've expanded quite a bit out into the US. I mean, look at this, right? They're issuing shares, there's 100,000 at $43.70. That's to pay off outstanding debt. And like, what do you make? I've never seen something like that. I mean, I've only been trading for like a few years, right? But I feel like I've seen, you know, stocks move up and you offer a little bit below, you know, what the high was of the rally. I mean, but a $43.70 is just absolutely insane. And so I don't know if this is some kind of gimmick. But yeah, on January 22nd, entered into a waiver and Fourth Amendment to credit agreement with affiliates of its senior lender. Okay, so the bank that's lending them money, Fortress Investment Group, LLC, the borrower and certain other subsidiaries of the company as guarantors to amend the credit agreement as of September 6, 2018. This is for $4.3 million of the outstanding principal amount of the term loans made under that agreement. Just kind of, I mean, you know, again, I can't think of a reason why they would accept this unless they were worried something bad was going to happen with this company and they just needed some kind of money. But then why accept a $43 price point? If Supercom has something, you know, in the back pocket that, you know, somehow makes them think their equity price is going to go up to $43.74, you know, it's just hard to say. I mean, now what I'll say is the company seems like relatively healthy. I mean, they're expanding out pretty heavily into the US. Israeli companies aren't necessarily, you know, smacked by tariffs or anything like that. Revenue is kind of slightly down, but net income is up significantly for them, 307% over last quarter. EPS up, net profit margin up 313%. So, I mean, the company's not in a horrible position, and they keep getting contracts that are yet to be, you know, reported on any of their 10Qs. So it's kind of interesting. I don't necessarily know what to make of it right now. Float's really small. Again, 1.8 million. Volume today is pretty heavy. Yeah, take a look at it, I guess, right? Of course, this is Internet of Things, digital identity, cybersecurity products, solutions, focusing on government quite a bit. I think Trump will spend a lot of money on stuff like that. Trump seems to be listening to whoever's telling him that they need to build out all these kind of different tech capabilities. So, yeah, quite interesting. Quite interesting indeed. All right, so let's move off a little bit from this. We're going to go over right here to the search bar. We're going to go to ord-oracle.com. Now, Tim Ord comes on the air, the show here, every Tuesday and Thursday. We always enjoy having him on. Of course, we're covering the market and gold today. Tim, how are you doing?
Good. There's a lot of stuff that's changed over the last 30 days.
Yes.
Actually, a couple of weeks ago, we talked about I probably should have put that chart up. I didn't think about it. But we talked about the 63-day trend that got down to 1.
Yes.
And 75% of the time that usually marked a high.
Yes.
And the trend reading is actually still kind of low here, but things, maybe if we get the pullback, the trend will start going up again and get that 63-day trend back up to where it does in bull markets. So that's maybe what's going to happen here. I'm not for sure. But on a short-term basis here, things are really kind of turned around after the inauguration. And these indicators I'm going to present actually present a bullish case for the market for this year. So actually, let's go to chart 2 first.
Yeah, absolutely. Got that up now.
It's kind of a repeat.
Yeah.
But anyhow, this is a swag breadth thrust indicator. That's the bottom window. And what it is NYSE advancing issues over NYSE total issues. You take a 10-day average of that. When it gets down below 0.1, it rallies to 0.6 within 10 days. That's usually what that is it's a selling climax. And after selling climax, it's a sign of strength. And that's how bottoms are made. And if you get a selling climax without a sign of strength, then that's what happens in downtrends. It'll go to a selling climax, no sign of strength materializes, then it'll go down again to another or a sign of weakness or a selling climax until it finally gets a sign of strength. And so what you like to see is a sign of weakness. Right after it, you like to see a sign of strength. And that's what we had here, and that's how you define a swag breadth thrust indicator. You have a sign of weakness. Right after it, you have a sign of strength, and that's how bottoms are formed. And if you look at this chart, the tan areas that I noted in tan vertically are times when these indicators were triggered from at least 0.4 to 0.6, and they all occur at bottom. Sometimes you get a cluster of them like we did in 2022, part 2023. They pretty much all happen at the same price level. October of last year, we had a zag breadth thrust indicator. We had another one or actually October 23, we had one, or April of 2024, we had one. Looks like we had one in looks like about September of last year, and now we got another one. So anyhow, that projects these indicators are not perfect, but they work pretty good.
Right.
I haven't really gone back. They probably work 85% of the time. So it's a good chance. You can have corrections, and but mostly this area right now that we came off of from I think it was a January 13th or 14th low up to where we are right now, this is going to be a support area. You really shouldn't break the previous low we had in January. You could test it, but not really break it. So we now have a support area building. So let's kind of look at the another couple of different indicators. This is an indicator I kind of developed years ago. It works pretty well. And what it is advancing issues over declining issues with 3-day average. And all I'm looking for here on a short-term basis is a selling climax. Then within 10 days, you get a sign of strength. And that's exactly what we had here. Basically, going into the January 13th low, we had a sign of strength in 3 days. And that was kind of I was watching that because right after that bottom, within I think it was actually 5 days, I marked here from January 10th to January 15th, you went from it was a 0.7 to 3 in 5 days. To really trigger the signal you needed within 10 days. So this did it in 5 days. It kind of showed a lot of strength. The market just kept rallying. So that's a short-term indicator, suggesting the short-term trend is turned up. And the top window is, we can talk about that when we come back.
Yeah, Tim, please stay right there. Folks, we will be right back with Tim Ord right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Again, you can check out his website at ord-oracle.com. You have the newsletter tab there. You have a book link as well. You can contact him, look at his results. Additionally, if you want to see more from Tim, you can go over to the services tab of TFNN.com. We have two fantastic webinars. There's the Secret Science of Market Tops and the 6 secret ratios every trader should know. Again, I always recommend starting with the 6 secret ratios first and then moving into the secret science of market tops. I think that works out extraordinarily well. Tim, before we went to the break, we were discussing potential kind of setups in the market. Which chart were we on? We were on 3 there, Tim?
No, we're on chart 1.
Chart 1 now? Okay.
Yeah, chart 1, we were talking about the bottom window, which is advanced decline with a 3-day average.
That's right.
And went from a selling climax to a buying climax within 5 days. That turns the short-term trend bullish. Then the top window is calling an oscillator. I can give you the definition, but just you can Google it. It'd be a lot simpler. But in a nutshell, it needs to get below minus 300, which we did back in late December. I marked those times with red dotted lines across the chart there. Then usually within a month, you need to get to plus 200. So you got a selling climax to a buying climax. Now this indicator is a little bit longer term. It actually can pick out major lows. And if you, anyhow, we're at some sort of a low here of significance. I'll put it that way.
Okay.
Market could just trade sideways for the year, and this indicator still be correct. Mm-hmm. But I'm thinking I thought we'd kind of go sideways for the year, and that still may be true, just because of the 6-day trend here. But we're at a base. I'll put it that way.
Sure.
So we're probably going to have some sort of a pullback at some point. But with the internal strength of the market, because the McCullough Oscar is actually sort of a complicated advanced decline. But it did reach a selling climax, and it did reach a buying climax all within 30 days. Actually, it was 31 days to be exact. So it didn't quite meet the parameters, but it came close enough. So anyhow, we're at a bottom. We were at a bottom. Can we pull back here? Let's flip to chart 3 to see potentially where we go. What's important here, not the top window, the second window down from the top, is the daily SPY. And I put a Bollinger Band on it. And so for some reason, I've used this indicator for quite a long time. But if you get above or below the Bollinger Band, a lot of times the market reverses. And I circled in red those times. This chart goes back to November, so it only goes back about 2.5 months or better. But if you notice, it actually picked up some decent short-term highs and short-term lows. If you notice right now, in the current time frame, we're up against that upper Bollinger Band right now. Mm-hmm. And if you look at the last time, it was below the Bollinger Band. It was actually right at the bottom, right before this rally goes. So it went from bottom of the Bollinger Band up to the top of the Bollinger Band. And a lot of times, if you notice, if you look, a lot of times it reverses at the Bollinger Band.
Yeah.
So can we get a pullback here? Yeah, I'm thinking we can. How big of a pullback? If you count the gaps up from the I think it was January 13th low, we actually have 3 gaps up. And there's a candlestick chart pattern called 3-gap play that predicts the market will pull back to the first gap after the third gap. So I've done candlestick charting way back for the last 30 years. It's not a perfect indicators, I guess you might say, but it does prove there's a good chance, since that gap is so big too, that we may get back to that first gap. So I don't know. We're up against a Bollinger Band. We've also got a divergence. If you look at the bottom window, is the VIX, which we actually touched a new high yesterday. So the S&P's made higher high and the VIX has made higher lows. Well, to really have no divergence, the VIX should actually hit a new low here, and it hasn't. So you got some divergences. So, are they real severe divergences? No, it just seems like the market's kind of exhausted, moved to the upside. and we need at least a rest. Either we move sideways or we actually have a decent pullback. And I'm thinking we may pull back still to that 585 area, just because we got quite a bit of divergences here. So nothing real significant to the downside, but probably a timeout in an uptrend.
Sure.
So I think once we pull back into that blue area, I got it kind of blue in there, right around the 582 to 592 area. I shaded that blue. The reason why I shaded that blue, that's where all the high trend readings occurred in the past, all in that vicinity. So once you start seeing panic trend readings near 1.2 or higher, you go back into that area, the trend reading should go back up to 1.2 or higher. And I'm thinking that's where the next bullish setup will form, because I think we'll get into that blue area. How much into it, don't know. But once we get into it, if that trend does not give up, get into the 1.2 or higher, that'd be a bearish sign. But most likely it will, because in the past it's done it. In the future, it'll go back in there. So I'm thinking that's where the next buy signal is going to be generated, somewhere in that blue area where the previous panic has occurred. So that's my view. I'm still not long here yet. So, but I'm looking for the opportunity. I got a lot of, information now that suggests that if we get into that panic area, we'll have a decent rally out of that area. So that's what I'm looking for.
And it really is wild how just quickly this environment changed. Anyways, speaking of divergence, I don't know if you got the chart that I sent you over the break. This is from one of our viewers. So he has, I'm going to pull up this chart as well that he puts in the den. Basically, the top blue line here, this is the SPX. The bottom one in the orange is the TLT VIX ratio. You have a divergence starting December 29th, persisting to the day. So he has a question. In your experience with this tool, would you anticipate the divergence to resolve by testing the 1229 high, or kind of what are you thinking of when you see anything like this?
I haven't really studied that long on that indicator. A lot of times I produce a lot of different indicators, and I watch them for months, if not even years sometimes, to really have confidence in them. And right now, I got confidence in my kind of advanced decline issues and stuff. So I'd put that aside. I wouldn't rely on it heavily right now. I don't know. Really don't have a right answer for it.
Yeah, understood. Thanks, Tim. Tim, please stay right there if you don't mind. We have another segment going. Folks, stay right there. We'll be right back with Tim Ward after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, Tigers. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Before we went to the break, we were talking a little bit about the market potential for it to maybe sort of buy signal if we traverse back down. Now, Tim, we also have some charts on gold. If you want to get moving into that.
Actually, getting back to this, the S&P market, the market, doing head fakes is common for the market. It can start off real bullish, turn to bearish, whatever. The people that don't change from bullish to bearish when the market says to do it are the ones that can get in trouble.
Yes.
My point is that 63-day trend back in January is actually still in bearish territory. But there's some shorter term stuff now have turned bullish, which takes precedence over the longer term, because maybe that's this pullback that we may have, according to my work, we probably will get at some point here down to probably at 585. That trend may, could reach, 1, 2, 3, 4, I don't know, not 4 probably, but that trend could really pull back some high numbers and get that 63-day trend off the bearish numbers, my point. So I think that's probably what's going to go happen. That 63-day trend a month from now may not be as bearish as it is right now. That's my point, because I think the trend's going to start be getting higher here, because that's what needs to happen to really have these big rallies as high trend readings. So I think we're kind of building a base here for that to happen. So.
Yeah, and that's what's great about these ratios, right? I mean, I know people who are perma bulls and perma bears, or have just one exact strat they follow, but these kind of metrics are a little bit unbiased, right? So it allows you to kind of pivot. And I mean, this has obviously been, just looking at this chart here on, on chart 3, clearly volatile market, a lot of uncertainty in the market still. So it's at times like these where you really need to be nimble and not, I would say for myself, not be perma bull, perma bear, just see what the market's saying and try to adjust as best as possible, which is why I like these ratios. So.
Yeah, that's why you got to be, nimble. I mean, once the trend, starts, it's usually you want to hang on to your life.
Yeah.
But a lot of these trends go up matter of fact, I've seen the market rally really strongly, and the trends stay 1.2 and higher over days at a time, and we had that in 2022. I think the trend started out and it just stayed there.
Yeah.
So that was just like building energy to the upside. So I'm thinking this time around that something similar to that may happen. So we'll have to wait and see how that develops. But right now, I'm thinking there's enough energy, enough panic in the market at that blue area to warrant a long position if we get there. So we'll have to wait and see. Anyhow, let's go to the gold market.
Love it.
All right, this is kind of a repeat. Looks at the bigger trend. You got the bigger, the monthly charts rule the weekly charts. The weekly charts rule the daily charts. So you always want to have the monthly chart in your favor. And this is one indicator that gives the monthly chart. It doesn't try to pick the exact tops and bottoms, but it does keep you in the major trend. And what it is, at the bottom window is the monthly cumulative up-down volume, and next window higher is a cumulative advanced decline on a monthly time frame. And I just put a Bollinger Band on it, and if you're above the Bollinger Band, you're in a bull trend. If you're below the Bollinger Band, you're in a bearish trend. And I marked with blue lines and red lines. The blue lines when both indicators cross the mid-Bollinger Band, so now you're in a bull market. And the red lines are times when both indicators close below the mid-Bollinger Band, you're in a bear market. We just flipped a bull market, I think it was back in May of last year, and we're in an uptrend. So that's important. So now you kind of look at, let's go to chart
5, right? Yeah.
Yeah, and this is kind of added on to that. So we're in a bull market. So now you want to look at valuations, I guess you might say. The bottom window is a valuation that compares the equity market to the equity gold market to the gold market itself. And so when things are cheap and value-wise, you want to buy. When things are expensive, you want to sell. And I got a red line, dotted line across that chart, came in at 0.145 in that vicinity. And every time it got down there, it was at a decent low. And so I marked those times with red dotted lines vertically. And we just had one here, I don't know when that came, wherever the last bottom was. I think it was probably March of last year. It came in recently. So it looks like about January. We just hit that level. So this is an early buy, or this is a relatively current buy signal on the valuations. And also I got some blue lines there. They're blue shaded areas. If you go back down to the bottom window, which is again the GX-dealer ratio, I drew a light blue line across the tops going back to 2016. That comes in around 0.2. And every time it got to 0.2, I drew a blue line or a blue shaded area up. If you notice, they all came at highs. So my point is if this ratio gets back up to 0.2, it could mean a high. We're a long ways from that right now. But previous times, going back to 2016, it marked highs. So that's something I'm going to be watching as this ratio starts to go up, which it has turned up. Once it gets to 0.2, this is one indicator I'm going to look at. Is that worth taking off my gold position and going somewhere else? I'll have to wait and see. But anyhow, that would be the danger area. That's the only reason why I put that chart up. So I kind of added to that chart. We showed this chart in the past, and we talked about that 0.2 area. Now you can see how that worked in the past. So that 0.2 in that vicinity could be an important area. So, which we're a long ways from it right now. So we're still basically cheap. So we got a minute to go. We got flip down to the real chart. This is a short-term chart. Bottom window is the 18-day average, up-down volume. Next window higher is the 18-day average, advanced decline. As long as those two indicators are above -10, we're in an uptrend. Excuse me. And the green shaded areas in the past is when both those indicators have been above -10. And we're below -10 here going into early January, and it turned up. And so we're in a bullish uptrend right now. And if you notice, both the indicators has made higher highs above the December high, where GDX itself made a lower high. That's a positive divergence that suggests at a minimum we'll get above the December high. How much, don't know, but it seems both these indicators seem to work pretty good for divergence. So nothing, I guess, short term looks good, intermediate term looks good, and actually long term looks good. So how high this market's going to go, I don't know. Once the monthly charts, if you go back, we'll flip back to chart 4 real quick. These charts in the past have lasted a year and a half, so at a minimum. So could be a while.
Tim, thank you so much for coming on. Let's see what else this market has in store for us on Tuesday. We'll see you then, Tim.
All right, thank you. Talk to you then.
Thank you, Tim. Folks, visit him, ord-oracle.com. You got to. It's some good stuff here. Stay right there. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We were just joined by Tim Ord of the Ord Oracle. Again, recommend checking out his website. That is ord-oracle.com. It's free to check it out, guys, so go do it. Newsletter tab right there, book tab right there. We, of course, love having Tim Ord on. That segment will be up for you all as well after the end of programming today. Services tab, TFNN. Again, 2 fantastic webinars from him. Strongly recommend checking that out. What are a few traders to do? Supercom, definitely watching this a little bit. I think we're going to get a pullback here, maybe at least in tomorrow. I don't know if they have some news in the chamber. Definitely taking a look at TSSI rather. Data center servicing, build out. I mean, this is a pretty sweet gig. I think it just doesn't have, I think too, like, is the volume just low everywhere today? I mean, it's kind of low right now in the SPY. This is want to kind of pop up, right before close. So kind of hard to call right now. We'll take a look at the 4 p.m. hour. But yeah, cautious on SPCB. definitely want to take a look further at TSSI. Their revenue is getting better. Margins are kind of tough. Big contract, really with Dell. So, right now, as they exist, they're pretty dependent on Dell sticking with them, but Dell seems to like them. Looks like they're expanding contracts with Microsoft and Walmart, which is really what you want to see. In the recent filing, their CEO talked about, yes, okay, our margins are kind of tight in this business that we're in, but we're thinking that when we expand a little bit more, those margins will get better. We'll be able to service kind of different things, essentially, and we should be making some more money. Again, this is a company that benefits, right, from this large amount of money that's going to data centers, and no one's really talking about it right now. And I think that's just because they don't know about it. Now, of course, somebody does. This stock has moved up, but it's worth doing your D&D on that. Seriously, check it out, folks. Thank you so much for joining me today. We'll be joined tomorrow morning, 9 a.m. with Tommy O'Brien for the Morning Mark Kickoff. Fantastic show. Take care. We'll see you then.
Building wealth